what's up guys? Today we're going to talk about the basics of accounting because this would keep us on track into our future topics. So the first thing we need to know is the definition of accounting. So what is it? It is the process of identifying, measuring, and communicating economic information to permit informed judgment and decision by user of the information. Let's say we have a sole proprietor named Gru, and he wanted to sell his minions. Gru has to identify the events on his business, whether is it accountable event or no. So when is it accountable? It is accountable when an event has an effect on his asset, liabilities, and equity. Gru also has to put a value on each transaction occurred, which is called measuring. And Gru also has to prepare and distribute accounting reports to his potential users. So the question now is, who are the potential users? First, a potential user like the investors, lenders, and other creditors has an interest on his company. Of course, they have to make sure that the company has good financial records. So before they invest or lend something, that's why they need to know first the records. So how would Gru communicate his financial reports? Gru has to provide the annual financial statement to the external users. The annual financial statements are things like the statement of financial position, which reports the assets, liabilities, and equity of the company. The income statement, which reports the revenue and expenses. The statement of cash flow, which we would identify if the cash flow came from the operating, investing, or financing activities of the company. We also have the statement of comprehensive income and the notes of financial statement. So how is Gru going to make our financial statement useful to others? We have to improve the quality of our report. Make sure that the report is relevant and faithfully represented because it is the fundamental qualitative characteristics of our financial statements. The information must be able to help the users make an economic decision, and the information is complete, no error, and no bias, which can also be called being neutral. There are also other qualitative characteristics like the comparability, the understandability, the verifiability, the timeliness of the financial statements. Today, we talked about the definition of accounting and about the financial statement and its qualities. Next time, we are going to talk about the elements of financial statements. So, thanks for watching Accountaholics, and I'll see you soon.